Trading conditions will get back to full form as the U.S. market gets back on the desks after last week's July 4th festivities. We come into the new week with the U.S. dollar having closed out the previous week on a strong note. The primary driver for the latest wave of dollar demand came from the U.S. monthly employment report, which was able to get back on track with NFPs as the series jumped back well above forecast. This had many market participants scaling back Fed rate cut bets, with the yield differentials moving in the dollar's favor as a result. However, structurally, we haven't seen any major breaks in price action that would suggest the dollar is getting ready to run again, and technically speaking, we're still confined to a state of consolidation in FX. We see this as a consolidation that could easily end up breaking the other way, with the U.S. administration continuing to push its soft dollar protectionist agenda, and with the Fed still capable of going ahead with those rate cuts on worry about risk associated with U.S. policy, especially with that flexibility to do so when inflation metrics remain subdued. As far as today's calendar goes, German trade and industrial production are the only notable standouts. Look for the market to trade on those broader macro stories and themes. It will be interesting to see if the pound can find its way back from a week of underperformance after suffering from a batch of discouraging data and renewed fears associated with no-deal Brexit. That's all for now.